Hello, everybody. So today it seems like nobody wants to talk about Bitcoin, nobody wants to talk about MicroStrategy, nobody wants to talk about Tesla and Tesla's big day. Everybody wants to talk about macro and what's going on in the geopolitics sphere. And this is a lost decade, as I've called it. I mean, since the early 2020s, it's been a mess. And I see no reason of the mess not continuing. We're well into the decade now, and every 6 months we have catastrophes after catastrophes. It is a lost decade. The 2020 to 2030 is a lost decade. Challenging for the fundamental investor, quite frankly, because the fundamental investor, you want to look at the long term. You want to be very, very long term, but there's always headlines that really mess up your trade in the short term, and sometimes it's very problematic. I can think of a few companies that, for example, went out of business almost exclusively because of the Fed keeping the rates high. And the time preference really being shifted to the now, to the right now, to the today. I think a lot of the 2020s look like the 2000s. I wasn't investing in the 2000s. A lot of us weren't investing in the 2000s. But in the 2000s, you had kind of the same recipe. You had the wildest innovation ever in the early 2000s. Today we have genomics, we have Bitcoin. Back then, they had the internet, just that. They had computers, just that, right? Today we have GPUs. Anyways, you had fear of expensive oil. I remember vividly in the late 2000s how expensive oil was. You had real estate in deep trouble. Real estate in the US is entering deep trouble territory, in my view. And now we have this type of headline. I'll let you read the headline. This type of headline. Of course, it's a headline. Of course, they exaggerate. Of course, they do it for the clicks. But we still haven't seen headlines like this in a very, very long time. And so the 2020s, they're not a good decade for just the broad market buyer, in my view. They're a decade that requires a lot of savvy in your buys, a lot of savvy in the assets you pick. They're a stock pickers decade, if that makes some sense. They're stock pickers decades. And, of course, MSTR, I'm not showing the long-term performance, again, of MSTR, the past 4-year performance of MSTR. But MSTR, of course, is one of these top picks ever since 2020, right? Along with NVIDIA is another top pick ever since 2020. A few of the small caps we cover on this channel have been top picks since 2020, right? HIMS is one that has performed very well since 2022. Look at the performance of Palantir. Look at the performance of Hood. This performance has transcended macro. But if you look at the broad indices, it's just so annoying. I'm so tired of focusing on the short term, but it's like this is what moves these assets right now. The short term. And so, of course, the short-term news dropped our cherished Bitcoin, at least my cherished Bitcoin, on a channel named Beat the Denominator. I love Bitcoin. I've loved Bitcoin since 2015. Bitcoin is everything. I love Bitcoin. That's why this decade is different. What I want to say here is this is cause for celebration. Bitcoin is going mainstream. The fact that Bitcoin is only down, it's not down that much. It was 106 4 days ago. Now it's 99, so it's down 5%. Well, wait until you see some movements on some stocks tomorrow when the markets open, right? With the Strait of Hormuz rumors at this point, I'm not sure that's going to happen or not. If it does, it's going to hurt China more than the US, because Hormuz ships a lot to Asia, very little to the US, only 3% to the US, a little bit to Europe, but not that much. We don't really know what's going to happen, but the headlines dominate. And of course, they title the headlines in a very scary way, and people sell, and this is all exacerbated by market makers. And the fact that it's only down, like I said, 5% on one of the largest geopolitical escalation in a decade, in my view, is very welcome news for Bitcoin. 10 years ago, we would have been way more down, right? 5 years ago, let's not go back 10 years. 5 years ago, this would have been way more down. So anyways, Bitcoin short term is weird. That's one of the first conclusions. Bitcoin is weird. The only thing you can sell 24/7 is Bitcoin. What's important in the 24/7 part here is the 7, right? On the weekends, it's Bitcoin that you can sell. There's a few stocks that you can sell 24/5, but 24/7 you really have Bitcoin, and that's pretty much it. The problem with Bitcoin, of course, is that a lot of the big buys happen over the counter on OTC desks, because of course, if you were to do a big buy on an exchange, you would move the price, and so a lot of the big buyers, whenever you want to go out and buy like thousands of Bitcoin at once, you kind of have to go to an OTC desk. Because of this, OTC buys tend to not move the spot price, and it's keeping the price artificially low until the OTC desks, of course, eventually, inevitably, will run out. And so there's this channel on Twitter, I can't remember the name, but it tracks the OTC desks, and I recommend you follow it. If you follow it, you will see the direction of Bitcoin on OTC, and that's really a better tell sign of what could happen to the spot price on the exchanges. There's another problem, of course. It's the leverage position and the market makers hunting the leverage positions, and so they manipulate the price on the exchanges. Essentially, you can do a lot of fake orders, fake exchanges, and you manipulate the price and you make the price go down. And of course, whoever took leverage on your exchange gets liquidated. They lose all of their money, and as long as people will go on leverage, there will be, what a lot of people call in crypto liquidity hunting. This is much harder to do in traditional markets, by the way, because this is banned in a lot of traditional markets. But crypto is, one step in TradFi now. I hope. I'm happy to report it's entering TradFi really well now, but it's still a much bigger foot, a much bigger step in this Wild West environment where this still happens. And so Bitcoin trades in a range because of that, because of market makers, and there is a lid. There is this lid on prices because of market makers, and if you follow it day to day, it's very annoying. And on this channel, now that I have this channel, I follow it day to day more than I ever used to. And I think a lot of us, now that we're more connected to social is bigger than it used to be a decade ago. Now that we're more connected to social, we follow it a little too closely. And, it's problematic. That's why I really like channels like Robert Breedlove's channel, for example, who is totally not about the day-to-day and, allows himself to think about Bitcoin over a 5-year or 10-year period, not following the day-to-day. It's a little tougher when you follow the day-to-day. And frankly, Saylor here is kind of prompting us to follow him day-to-day, or at least week-to-week with his tweets. Of course, he tweeted this morning, but that's the point of his video. Usually this is a celebration video. Usually this is a happy video. I'm not too happy about this video today because frankly, that's not what I wanted to talk about today. I wanted to talk about how I'm excited I am about Bitcoin and his buys. But okay, he buys more. He's always going to buy. He's always going to keep buying, except for a week he doesn't buy. And so, you may remember first quarter, he didn't buy 1 week. Maybe he's not going to buy 1 week this time. Maybe that's going to be this week. I don't know. The reason why I say maybe it's going to be this week is because, Bitcoin is per what I read, maybe headed towards 94,000. And so, as the meme says, right, Bitcoin always buys the top. And so if it's at 95, maybe it's not going to buy because he always buys the top. That's the meme. That's the joke. And of course, the joke is rooted in the fact that buying the top 3 years ago looks like a really, really good idea. And I remember when this stock was trading in a pre-split basis at $19, $20, $30 in pre-split, he was also buying the top back then, and now it looks like a really good idea. So this meme kind of goes both ways. Buying the top at 106,000 might look like a really, really good idea when Bitcoin is trading at $400,000. So my guess for this week is that ATM was none of it. I mean, I would hope so. I don't know, but I think he's waiting for the price to NAV to recover. And my guess for this week is it just did a little bit of strike and strife preferred and a small buy, and so maybe we get $100 million buy. That would be my guess for this week. This is just the typical pattern of buying. Folks make fun of him buying the top, but if he buys the top, but only 100 million of it, even in the short term, that's not going to be a big difference or a big problem. Macro. Let's finish with the macro and some of the kind of long-term considerations here, and this is my thoughts. And I know a lot of people disagree with me on macro. I know on this channel we have a lot of traditional investors that follow the channel because of I cover undervalued stocks, and so a lot of traditional investors tend to love Powell and love what Powell is doing. I happen to absolutely dislike what Powell is doing, but I absolutely dislike what's going on right now with the geopolitics as well. Absolutely dislike the geopolitics of this. These tensions in the Middle East are no good, in my view. The closure of the Strait of Hormuz. So that's the headline now. We don't really know what's going to happen. But it has to be approved by higher up leadership. If it does, what will happen if it does? Well, sure, the supply that will be impacted will be more of a supply going to China and going to Asia. And so that's worse for them than it is for the US or even Europe, because Europe's oil is shipped through other paths. So it's bad. It's bad, but the price of oil is still an international price, and it's internationally traded, and so it still likely means that the oil going to have to go up, because if the Hormuz Strait is closed, that means a lot of the oil that was earmarked for, say, Europe is now going to have to go to China. And so oil will likely go up, and of course, if oil goes up, inflation expectations shoot up, prices in the economy shoot up, and so that means we get no rate cuts, or we may even get a rate hike. But my base case scenario, and I'm tired of even looking at the CME tool, the CME FedWatch tool, who keeps being wrong and wrong and wrong. My base case scenario now for cuts is that we get no cuts until May 2026, until a president of the United States actually puts a new Fed chair who's going to be extremely dovish, and he will likely choose the most dovish chair out there. So that's my base case, is no cut until May 26, and get ready for people starting to talk about rate hikes if this actually happens. So I'm staying put until 2026, and the long-term consideration of this, of course, is that this is good. This is actually great for long-term accumulators, for long-term buyers. If you're buying stocks for the long term, if you're buying Bitcoin for the long term, if you're buying MSTR for the long term, this is great for you. The only situation where it's bad is if you're trying to acquire fiat right now. Right now, if you're trying to acquire fiat, well, that's not very good. But in these times, you have to remember that the number on the account, the number of on your broker or on your crypto wallet or whatever, the number on that account is a derivative of fiat. That number is based on fiat, right? Fiat, we don't know how many fiat there is. So think about any number of dollars on your account. Think about as a fraction. Think about it as a fraction where you don't know the denominator. We don't know how many dollars are out there. And the Fed, by the way, and I didn't cover the Fed because I always get bad comments, but they didn't cover the stealth QE, or at least not in great details. They didn't address that, but in my view, they started stealth QE again. You can see it on the chart. So they didn't cover that. It's just, anyways, it's a good situation for accumulators right now. It's not very good if you're trying to sell. If you're trying to retire, it's not very good. So the timeless thought on this, and this is what I'm doing, right? Focus on your craft. Focus on your day job. Focus on what you do best. Stack, right? Keep stacking. Keep buying your favorite stocks. It's not the moment to sell, and it's also not the moment for leverage, not the moment for short-term investments. What's a short-term investment? That's an option. An option is a short-term. If you're trying to predict where the market is going to go 2 months from now, 1 month from now, even worse, 1 week from now, well, that's not going to work out very well, is it? Because we have no idea what's going on in the short term. But in the long term, in my view, life is good. And in the long term, this is just an opportunity. This is just a buying opportunity. And I know that we are tired of the 2020s. The 2020s have been buying opportunities every 2 to 4 to 6 months. We've had major buying opportunities. But I think it's going to be the theme of the decade, quite frankly. And if you're an index investor, it's not as good. If you're a stock picker and you pick the right assets, it's a little better. That's my take on it. Anyways, this was not financial advice, not investment advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.